Across India, millions are waking up to a phone full of threats. A small loan has turned into a cycle of harassment that targets not just your wallet, but your family and your reputation. Most borrowers assume every collector follows the same rules. They treat digital extortion the same way they treat a bank's recovery efforts, which makes it impossible to solve either one. Escaping this trap requires you to pause and analyze the source. Before you pay a single rupee or block a number, you have to diagnose the specific type of lender you are dealing with. This chart maps the debt landscape: regulated banks versus unregulated apps, and manageable debt versus default. Focus below. Unregulated lenders operate illegally using data extortion. On top, RBI-registered banks legally recover money under strict guidelines. You cannot hide from these debts. Reacting with blind panic gives the lender control. To regain it, you must categorize the threat before taking your first step. The first diagnostic question is simple. Is the lender registered with the Reserve Bank of India? If they aren't, you are in Branch A. These are 7-day loan apps distributed via APK links. They exist entirely outside the formal banking system. These apps disperse small amounts to buy a specific asset, your contact list and your photo gallery. Once they have that access, the blackmail begins. Paying these operators flags you as a viable target for more extortion. They will keep your data and demand more money regardless of what you pay. The only effective defense is to stop paying, block the app, and file a report on the RBI Sachet and national cybercrime portals. This creates an official record of the crime and allows authorities to begin tracking the fraudulent accounts used to move your money. You will likely face the social friction of scammers messaging your contacts. It is a temporary cost to permanently end the extortion. If the lender is registered, you are in Branch B. These are legitimate banks and NBFCs, and their calls cannot be ignored. Even when they use aggressive recovery tactics, these institutions are legally bound by the RBI Fair Practices Code. You have specific protections. Agents are restricted to calling between 8 a.m. and 7 p.m. They are prohibited from workplace intimidation or public shaming to collect a debt. To enforce these rights, you must document every call and demand the agent's bank-issued ID, and file grievances with the RBI Ombudsman when guidelines are violated. Utilizing these guidelines shifts the dynamic. You move from a state of distress to being a legally protected negotiator. Once your rights are established, you have to look at your math. Do you have a reliable monthly income surplus? If you still have a surplus, your best path is Branch B1, debt consolidation. This chart shows the strategy. You take a single, lower-interest loan to clear multiple high-interest credit cards instantly. 4 separate debts combine into one manageable monthly payment. This halts the interest spiral. Over 2 years, your credit score climbs back into the 750-plus zone, keeping future options open. But look at the principle. You are still paying 100% of what you borrowed. Consolidation saves on interest, not the debt itself. The risk is the debt spiral. This strategy fails if you do not have the discipline to stop using the credit cards you just cleared. You are paying full price for your debt today to secure your long-term financial mobility and peace of mind. If your income is gone or your business has failed, you enter Branch B2, debt settlement. You negotiate with the bank to pay a fraction of the balance as a lump sum, usually citing extreme financial hardship. Settlement provides immediate cash relief. It stops the legal notices and ends the daily pressure from recovery agents. However, the debt is never marked closed. It is branded with a settled tag on your CBIL report. That tag initiates a credit blackout. For the next 7 years, you will likely be rejected for affordable home, auto, or business loans. Settlement is a survival tactic. It ends the crisis today, but it leaves a 7-year mark on your ability to borrow. Map your situation to one of 3 profiles. Extortion targets. Stop paying unverified apps immediately and report to the Sachet portal. Stressed optimizers. Consolidate high-interest debt to protect your credit score. Survival mode. Negotiate a settlement to end harassment, accepting the long-term credit impact. Your choice determines your access to credit for the next decade. One path preserves your ability to borrow at low interest rates, while the other leaves you locked out of the banking system until that settled tag expires. Do not let shame drive you to pay scammers, and do not let fear keep you from responding to legitimate bank notices. Effective recovery requires looking at the next 60 months of your financial life. Every decision today either builds a bridge back to traditional banking or creates a 7-year barrier to it.